Has the Federal Reserve just flipped the cryptocurrency market? The question is, which way? Of course, Jerome Powell, our Fed overlord, the man who rules all the money in the world, just dealt his cards in his latest speech, and it's a bit of a mixed hand, to be honest. There's good news, there's bad news, a little bit of everything stacked together. Does the good news outweigh the bad? Well, stick around because we're going to try to figure out if our crypto bags are going to keep blasting off or if the big crash is just around the corner. At the time we're recording the video, the crypto markets are flashing some green. Initial signs that the market liked what Jerome Powell had to say. Bitcoin punched all the way up to like $86,000, $87,000 today. Nice. But is this enough to rocket us off to new highs in the coming months, or is this just fake out the final rally before we go to Goblin Town? Hold that thought. First, let's zoom out. The Federal Reserve's got a dual mandate when pulling the strings. Number one, maximum employment, keeping the economy humming to churn out jobs. Employment right now, by the way, near record lows. Number two, price stability, nailing inflation to that 2% mythical unicorn target Powell's always chasing. Come on, man, just keep going. You're going to catch that dragon eventually. Look, how does the Fed play it? Interest rates are the big hammer. They're an indelicate tool at best. High rates choke the money supply, less cash for businesses to expand, less heat in an overheating economy, and bam, inflation cools. Donald Trump has a different opinion. He's trying to push down inflation with cheaper gas. We'll see how it goes. Other things as well, deregulation, etc. Flip it up here, low rates, cheap money, juice things up, okay? More jobs, more spending, flood of cash into risky bets like stocks and crypto. Let's start with the tough stuff though. Bad news first, from what Jerome Powell said. We've been hoping for a rate cut to shake things up, but no bueno. Now, we didn't really expect a rate hike. Would have been nice, but we didn't expect it. The Fed's holding steady at 4.25 to 4.5% for interest rates. Powell put it plainly, we do not need to be in a hurry to adjust our policy stance. In other words, they're waiting until inflation calms down. And it is trending down, but not as much as we'd hoped. Inflation climbed to 2.7% for 2025, up from December's 2.5%. Market and survey-based measures are pointing to tariffs as a potential culprit on why the Fed is not hitting its inflation goals. In the short term, with more tariffs possible on April 2nd, inflation could be a little stickier than the Fed hopes, keeping rates higher for longer again. Growth, of course, is another worry, down to 1.7% for GDP forecast in 2025 from 2.3% in Q4 2024. Powell calls it solid, but it's slower. It's a slowing economy. Consumer spending is easing off. Jobs are absolutely okay. At the moment, 4.1% employment is fine, 200,000 jobs added monthly, but the Fed sees it potentially creeping up to 4.4% by the end of the year. If it's just a slow creep up, that's fine, but if it starts moving fast, watch out. Powell warned too of unusually elevated levels of uncertainty in the markets. That's putting it lightly. Powell's cool with waiting right now, saying that we're well positioned to wait for greater clarity in the markets. Fine for him, but for us, might be a bit of a bumpy ride. Now, we're going to brighten things up here in a second, but real quick before we do that, guys, I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs. And currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account, and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Let's look at the positives here of what Jerome Powell had to say. There was good news, okay? Every cloud has a silver lining, right? First, Jerome Powell still projecting 3.9% interest rates by the end of the year, meaning rate cuts are coming. That's a win. 2 25 basis point rate cuts will bring us down from 4.25% to, well, under 4%. Rates are set to drop to 3.9% by the end of 2025. 2 25 basis point cuts get us there. And then 3.4% by the end of 2026 with their current forecasts, another 2 25 basis point cuts. At least those are the current projections. Things can change. They have to update models and projections constantly. Still though, 2 rate cuts for 2025 still on the table. That's good. There's more cash flow for risk assets. We might even get 3 if economic conditions worsen. Picture this, cheaper money by the fourth quarter means Bitcoin could break an all-time high, at least by the end of the year, if not sooner, if M2 money supplies matter more. And maybe our altcoin bags, our dog coin bags, that have been lagging might finally catch a break. Now, slower growth and higher unemployment are not great news. However, it's also possible that they're the spark that forces the Fed to act to do more rate cuts. Why? Well, let's circle back to one of the Fed's dual mandates, maximum employment. Right now, near historic lows. Okay, it's really important to point out anytime you talk about unemployment. Powell said that the Fed remains committed to supporting maximum employment. Growth at 1.7% in 2025, down from 2.3%, and unemployment tracking to 4.4% by the end of the year could signal a bit of trouble. The economy could be stagnating. A stagnating economy means fewer jobs. So Trump's got to really put the pedal to the metal here to get companies to invest in America, bring those jobs back home, okay? Piling pressure on that already elevated 4.1% unemployment rate. Now, Powell's ready to pivot. If the labor market were to weaken unexpectedly, the Fed can ease policy accordingly. If jobs falter, the Fed might slash rates even sooner than expected. Still very, very high chance we get a rate cut in May, and very high chance for June as well. Now, if employment starts faltering, he can flood the market with cash, make it easier for people to hire more employees and stuff. And then, of course, the degens like us, we're just waiting around for those lower rates, send crypto soaring, make money, make it all back on dog coins, baby. You can bet that the Fed is watching all of this closely, though, okay? Now, another bit of good news here, though not included in Powell's speech, is that the chances of recession were significantly lowered according to the Cleveland Fed's recession probability model. Now, this is a very positive thing because there was a heightened risk. The recession never came. Now the trend's already going down dramatically. So the likelihood of a recession now very low. From an almost 60% probability in December, according to the model, we're looking at an almost 20% probability now. And here's some more good news. Starting in April 2025, the Fed's easing up on its balance sheet for treasuries. So they've been letting $25 billion in maturing treasury bonds roll off each month without reinvesting, thus pulling cash out of the system. Now they're dropping that to just $5 billion, so an 80% reduction, meaning a lot more money in the system. Think of it this way. At the moment, they're allowed to sell $25 billion each month. By April, it's going to be reduced to just $5 billion, which means more money in the market. So that's only actually a third total reduction of QT, quantitative tightening, because they have not messed with mortgage-backed securities, which are around $35 billion a month, okay? So we've gone from 60 to 40 billion, still good, still a very positive thing. Risk assets liked it, okay? Increased liquidity can, of course, then flow into risk assets, crypto, stocks, all that kind of stuff. So the most important question is this all bullish, bearish, or what? What the heck's going on here? Well, if you ask me, we're leaning towards bullish here, okay? But we need patience. Powell's cards show promise, but the Fed's not in a rush. Rates right now, 4.25 to 4.5%. Inflation's at 2.7%. Tariffs loom. A lot of fear and uncertainty in the market still. But the end of, or at least the easing of, quantitative tightening starts in April, and we'll get more QT reductions as the months go on. Treasury redemptions dropping to $5 billion monthly. That's good. There's more liquidity for risk assets like crypto. We're also expecting a couple more rate cuts for the rest of the year, so a lot of good stuff is lining up. Global M2 pumping, which the Fed doesn't really have anything to do with, but global M2 pumping. And if we think about it, this ties up with the crypto community's thesis that the market peaks might come late 2025 or sometime in early 2026. We are still far from the 500-day mark from the beginning of the Bitcoin halving. 5+ months left on average would be a normal cycle top. Pi cycle top, Peel multiple, all this kind of stuff are still not saying to sell. And maybe those on-chain indicators are less important with Wall Street here. I'm open to that possibility. And I know the recent news has been a letdown. You might feel jaded with the sideways price action, but dudes, America's literally going to buy like 1 million Bitcoin. Zoom out, okay? It might not feel like it, but everything is lining up. It might take longer than you think to happen, but it's going to happen. The second half of the year, that might be where all the action is. You just got to survive until then. 2 rate cuts are coming. Quantitative tightening is ending. Tax cuts are coming, potentially really big ones. Greater crypto clarity in the U.S. M2 pumping. OPEC pumping more oil into the system, causing the prices of oil to go down, meaning inflation's going to go down. A weakening dollar, man. All the stuff is happening. The tailwinds of tailwinds is here. The question is, can the market actually behave and do what it should do in that kind of scenario, which is pump like mad to the heavens? We shall see. Doesn't happen overnight. Nothing happens immediately in markets. But that's a lot of factors lining up for us. I could be wrong. Frequently am. You guys know. But this current setup does not sound like a mega super bearish, imminent recession, Great Depression kind of stuff. It sounds like we are actually gearing up for the next phase, possibly the last phase of the bull market. We just need to have patience. Thanks for watching.